Right now, the crypto market is sending completely mixed signals. Retail is getting bullish again, banks are calling tokenization a threat, and regulators are suddenly opening doors that were closed for years. So the real question is, will this actually lead to a rally, or is this setting up to catch everyone off guard? Quick disclaimer, this is not financial advice, this is for educational purposes only. Always do your own research. Welcome back to Ledger Pulse, where we break down what's actually happening beneath the surface of crypto markets. If you want signal over noise, you're in the right place. Let's get into it. Let's start with sentiment. According to Sentiment, retail traders are increasingly convinced this rally will continue. Their data shows the crowd expects higher prices over the next 3 months. Optimism is rising, and momentum is building. But here's the catch. Markets don't reward the majority. They tend to move against it. Historically, when optimism spikes like this, it often shows up near local tops, not bottoms. So right now, we have a setup where retail is leaning bullish, confidence is growing, positioning is getting crowded, which raises a key question. Is this strength sustainable, or is it being set up? Now let's shift to something much bigger. Jamie Dimon, CEO of JP Morgan Chase, just made a critical statement. Tokenization is no longer a side experiment. It's now considered a competitive threat to traditional finance. And that's a massive shift in tone. Because for years, crypto was dismissed. Now, it's being taken seriously at the highest level. Dimon specifically pointed out that new competitors are emerging through blockchain, that stablecoins are part of that shift, and tokenized systems are changing financial infrastructure. Here's the key takeaway. This isn't about crypto trying to replace banks anymore. It's about banks realizing they might lose control if they don't adapt. Now, let's talk regulation. Coinbase has reportedly received conditional approval from the OCC for a national trust charter. This is huge because it opens the door to federally regulated custody, stablecoin issuance, and tokenized financial products, all within the US regulatory system. And this changes the narrative. Crypto isn't being pushed out anymore, it's being brought in. Carefully, strategically, but undeniably. Now look at what's happening with infrastructure. Circle is planning to launch surBTC, a wrapped Bitcoin product backed one-to-one, and it's aimed directly at institutions. That's important, because this isn't about speculation. It's about building financial rails around Bitcoin, and whoever controls those rails controls liquidity, access, and ultimately, influence. This next one might be the most overlooked signal. According to data shared by CoinMarketCap, citing Artemis, stablecoin transaction volume has surpassed ACH payments. Let that sink in. Crypto rails are now processing more value than one of the core traditional banking systems. Quietly, without headlines, this is how disruption actually happens. Not with hype, but with infrastructure scaling behind the scenes. Now let's talk about regulation again, because things are moving fast. Journalist Eleanor Terrett highlights a new framework being discussed, Reg Crypto. This proposal would create exemptions for token fundraising, allow projects to raise capital more freely, and introduce structured disclosure frameworks. At the same time, we see Paul Atkins is advancing a safe harbor rule. This would allow crypto startups to operate without immediate regulatory pressure. And that's a big deal, because it gives innovation room to grow. Now let's zoom out globally. Central banks from South Korea and France are holding joint discussions on digital assets. That's not resistance, that's coordination. And when central banks start aligning, it signals long-term integration, not rejection. And finally, policy momentum is accelerating in the US. Senator Bill Hagerty confirmed that a crypto market structure bill is moving forward, with timelines pointing toward the end of April. This matters because regulation has been the biggest uncertainty in crypto, and now we're starting to see direction. So when you put all of this together, retail getting bullish, banks taking tokenization seriously, Coinbase breaking into regulated finance, stablecoins scaling beyond traditional rails, and regulation starting to take shape, and global institutions aligning, that doesn't look random. It looks coordinated. So here's the question. Do you think this is the start of real institutional adoption? Or is this just another cycle that ends the same way? Drop your take below. If you found this valuable, like, subscribe, and stay locked in with Ledger Pulse, because the biggest moves in this market happen before the headlines catch up.